Let's say the House flipped. The good news on that is all new bills, all new initiatives that are not bipartisan bills, in other words, ram-a-jamma down your throat bills like the student debt thing, ram-a-jamma bill like anti-inflation bill. I mean, nobody wanted to vote for that on the other side of the aisle. So those kinds of bills are dead for the rest of this presidency. There'll be total gridlock. And that is a good thing. The markets love gridlock. Markets like a pause that refreshes. We need a pause. The printing presses have gone insane, and that's why we have inflation in the first place. I mean, for all the talk about inflation, you print $6.72 trillion in 30 months. What the hell did you think was going to happen? Of course there's going to be inflation.
Investor and Shark Tank star Kevin O'Leary, in his most recent interview with Stansberry Research, has given his take on the economy and the financial markets, specifically the crypto markets, which O'Leary has been very outspoken about and a huge advocate for. O'Leary believes that cryptocurrency is going to, in time, become the 12th sector of the S&P 500 and has high conviction it is the most promising and innovative investment opportunity currently available. Within his most recent interview, O'Leary speaks on why, although he believes that the economy is still quite strong with not many signs of slowing down, with unemployment low and consumers still spending healthily, O'Leary believes this gives more ammunition for the Fed to continue raising rates, implying more downside for markets. However, O'Leary also believes that even so, we are much closer to the end of the rate hiking process than the beginning, and that now is the time to begin purchasing stocks and layering into digital assets. Make sure to stick around to the end of the video where O'Leary discusses the digital asset market and his latest approach to cryptocurrencies. The Shark Tank star says he is switching things up a little in his approach. O'Leary also touches on the midterm elections, which are due to come up on the 8th of November. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
A highly unusual situation going on here, given how much the market is corrected, anticipating slowdown in earnings and a recession and a Fed gone wild with another 75 and potentially another 75 after that. None of these rate hikes have affected the consumer yet, and I speculate it's for one singular reason. No economy has ever printed $6.72 trillion in 30 months. That's basically turning on the printing presses, printing money, giving it away for free, dreaming up other reasons to give more money away for free, such as student loan forgiveness. And then the Anti-Inflation Act, that's just hilarious to call it that. It's very inflationary. And so at some point, we'll have to stop printing money, but it hasn't happened yet. All-time record deficit, consumers flush with cash, and these earnings are proving it out this week. If we're going to get a slowdown in earnings, it's probably going to be in Q1 or 2 next year, because it doesn't look like it's going to make it this quarter. And as a result, we've got a really perplexing, difficult time for investors. Well, the inflation fears come from the CPI number, which was over 8%, and that is inflationary. However, there's a new narrative going on in the market with investors regarding how the CPI is constructed. 40% is in shelter, and shelter stats are notoriously long dated. In other words, the numbers you're seeing now reflect the shelter market, the housing market, the apartment rental market 18 months ago, when it was smoking hot. That is not the case in major cities now. Rent increases have slowed down, housing prices have softened as mortgages have increased, and yet it's not reflected yet. So it's a little bit of saying, I want to change the data set now because I don't believe it anymore. That's kind of one narrative. But even though it's sitting at over 8%, the market is willing to fibrillate, waiting for more earnings validation that we actually have a slowdown. It's simply not there yet. And so if the Fed keeps using this 8% number and keeps ratcheting rates, they will overshoot. Recessions start traditionally with a rise in unemployment. Haven't seen that yet either. If you're in the food services industries on either coast, where in California, for example, the minimum wage is $15, you can't even hire people for $23 an hour now. They don't even want to work. So that cash that's flushing around the system is still having an effect there. But the market has made a decision. The corrections in the S&P 500 have been brutal and fast in every single sector. And so the market, generally speaking, is never wrong forever. And what it anticipates is a sharp decline in earnings, because right now the PE, if we believe the earnings for next year, is sitting between 14.5% and 15%. Well, that's getting close to a bottom. I mean, you could argue the bottom would be 12x, which is really, really low earnings for the S&P. But here we are at 15. I'd argue it's time to start nibbling. You can't guess the bottom, but my goodness, just on a strong index basis, you could go into this market saying to yourself, regardless what the correction is, 2/3 of it's baked in. Well, Biden has to talk his book because he's only weeks away from a midterm where he's threatened right now to lose the House. Nobody knows what's going to happen in the Senate. What they wanted to have happen was that there's some indication of a slowdown in inflation. They didn't get that. And their gas prices in some states are on the rise. That's never, ever good for the incumbent, regardless of what party they're in. Inflation really kills you at midterms, and that's what they've got. So also, if the Fed raises another 75 basis points before, which they will do before the midterms, that's not helpful either. So it's a really difficult act that he has to, higher wire act he's got to do. Biden's got to talk his book and try and keep as many of his candidates in the game as they can. When we talk about politics, abortion was the issue, and that seems to have been shifting now in the last few weeks to inflation and the cost of protein like chicken and food goods and gasoline back in the fray again. So, these things are binary. They're very difficult to call, but it does matter to you as an investor what happens in the midterms. There's no question about that. I don't see anywhere you can be safe right now. You have to kind of tread water. I continue to add in 2 areas really high quality US S&P 500 companies, of which I buy 100 of the 500 in an index from ALPS called OUSA. It's an ETF, anybody can buy it. I'm not recommending it, I'm just saying what I use. And then I use another ALPS ETF called OUSM, and that is 200 names in the Russell 2000. So a fraction of the Russell 2000, the companies that make money. My whole thing now is, while I'm waiting in the weeds, is I'm willing to buy companies that are profitable, have high return on assets, and do cash distributions. Everything else I don't want to own, because those are getting absolutely crushed, and the bottom is not in yet. So many companies, when people thought, oh, it can't get any lower, and it goes down another 40, 50%. Yeah. There was a huge change in the direction of capital going into crypto in the last 6 months. So what's changed now is most of the investors that are willing to take the highly speculative investments, and some of them are large, a new deal called Mysten, M-Y-S-T-E-N, just got funded. Evan Chung was the name of the fellow who left Facebook. He was doing their digital currency. He took the whole team, set up a new company, raised $300 million in 45 minutes, basically without a deck. FTX was the lead investor at $100 million. I put money into that deal. He is promising a new blockchain to service financial transactions at 10 times the speed of anything else out there. And we do need that. So there's a lot of interest. But there's an example of a have company that really has no revenue. It's just starting its journey with now 300 million. It was almost 6x oversubscribed. The rest of the crypto market that came out of the DeFi space has been obliterated, and financings there are being done in crammed down rounds, 40, 50, 60, 70, 80% less than the last round. Very, very difficult. If the company's not profitable, there's not a lot of investor appetite for it. So you have the haves and the have-nots. In addition to that, the whole Web3 movement, which was what that whole conference was about, is more towards mass adoption. Everybody that's investing money into that is trying to solve for the wallet, number one. Number two, security. And number three, regulation. Those are the 3 horsemen of the new Web3 movement. Mass adoption through regulation, through security, and a much easier to use wallet. The best analogy I can give you, until your grandmother can figure out how to buy Bitcoin on her cell phone, we don't have a wallet that works yet. It has to pass the grandmother test. Well, I'm doing what a lot of other traders are doing. I'm going into the November time period with over 34 different positions on, many of them underwater. So naturally what I'm going to do, now that the IRS and other regulators around the world are now looking at crypto in terms of tax compensation, very much like a security, I'm going to have to trade. So I'm going to be doing trading, taking some of the projects that have been decimated down 40, 50, 60, 70, 80, 90%, selling those and basically buying what I consider the granddaddy index of all crypto, Bitcoin. So I can go through the tax season owning more Bitcoin. I will, maybe a little bit more Ethereum, but basically the large market cap names are the ones that matter. So if you're going to do a basket of names to hold through the back end of the year, I would say it's going to be Bitcoin, Ethereum, Polygon, Solana. Those are huge market cap names, and I think are going to index together. I don't think any one of those breaks out of the pack. They all kind of trade in tandem. So if you're only going to own one, it's probably going to be Bitcoin, but all the rest trade in tandem with Bitcoin anyways.